Welcome to Mid-American Money. I'm Ernie Goss, Professor of Economics at Creighton University and the Director of Economic Forecasting Group, also at Creighton University in beautiful downtown Omaha, Nebraska. Today I'm joined by my usual partner here, Tony Hendrickson, who is the Dean of the College of Business at Creighton University. So very glad to have you today. We're going to talk about our most recent survey findings. That's for the month of September. They were not good. And the national numbers that came out this morning, or last week as well, also not good. But the media came out and said, wow, this is so good. Well, it's so good because we were expecting so bad. In other words, it's just not an economy that's growing. Our survey, which is in 9 states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, not doing very well, slowing down. The fourth quarter looks not very good. Tony, what do you think?
Well, I think you're right. The economy is slowing down, and the expectation that the numbers were going to be worse than what they are. I'm skeptical. You know, our government's been in a pattern here of waiting a few months and then revising those numbers downward. Unemployment numbers in June, July, drastically reduced in succeeding months.
Absolutely.
And so I'm skeptical that the numbers, as good as they were, and people thought they'd be worse, I think that in 60 to 90 days they'll be revised downward significantly.
And we saw QE3, which came forth with the Federal Reserve, quantitative easing 3. And as you know, Tony, and as our listeners and our viewers know, this is the Fed pumping more money into the economy via buying bonds. So they're pumping, reducing the value of the dollar. So if it's not so bad, why are they doing it? The answer is it is so bad.
It is so bad, and you're right. This is QE. What number
3,
are we on?
We're on the 3 now.
I got a $1,000 bill in my post toasties this morning. I mean, you know, Ben Bernanke's standing on.
You better spend it today, Tony.
I mean, Helicopter Ben, he's throwing it out there.
And our inflation gauge for the month of September was up as well. So not only are we looking out at more inflation out there, we're already seeing more inflation well above the comfort level of the Federal Reserve. So all in all, it was just not a good survey, but given the expectations, we've ratcheted down what we expect. It's sort of like, you know, that's not the way we want to do this. We're Americans.
It's not. Inflation is here, and you and I have been talking about this actually for a couple years now. I know that there are people that are skeptical that the money supply is growing like this. They're concerned that, well, the velocity is down. Absolutely, velocity is down. But we have pumped so much money into the money supply. There is no way that equation is going to work without it being substantial amount of money in this money supply. And those few dollars chasing limited goods, got to be inflation.
Absolutely. And Tony, spend that $1,000 you got in the post toasties there. And thank you for joining us for this segment of Mid-American Money. Tony Hendrickson, Dean of the College of Business, and Ernie Goss here. Very happy you joined us. And from now till our next segment, our next show, may your economic cup runneth over. Thank you. Welcome to Mid-American Money. I'm Ernie Goss, Professor of Economics at Creighton University and Director of the Economic Forecasting Group, also at Creighton University and here in beautiful downtown Omaha, Nebraska. As usual, joined by Tony Hendrickson, the Dean of the College of Business, also at Creighton University. Now we're going to talk about the warning signals. What should you be watching? What are some indicators that you could keep an eye on that would let you know things are going well or not so well? Tony, any indicators that you're going to be watching in the next month?
Ernie, I'm looking at European bank activity and bailouts, how they structure the debt for the pigs.
Portugal, Ireland, Italy, Greece, and Spain.
Thank you. And you know, things are not looking rosy for them.
No.
Talk about whether or not Germany would be better being outside the euro. I think that would be probably good for the Germans.
I think it would be.
It would be disastrous for the rest of the euro, and particularly for those for Spain and Portugal.
You know what to watch on that? To keep it one signal, I would say it's a 7% yield on the Spanish bond, sovereign bond. If it gets to 7, watch out. It gets above 7, really watch out. So I think you're absolutely right. That comes back here home to us in the good old U.S.
Ernie, what else are you looking at?
I'm watching on the, believe it or not, the Case-Shiller Home Price Index. It's now positive year over year. If that number keeps getting better, that's going to be a very good signal. That comes out the 4th Tuesday of every month, Case-Shiller from Standard & Poor's Case-Shiller Home Price Index. And I'm also, of course, like you, watching the employment reports. Not good, as you indicated in our last segment, not good. They're revising down the previous ones, so they're not getting it right. So the seasonal adjustments there are a real concern. So I'm really concerned.
I'm up in the air on housing, Ernie.
Yeah.
It looks like that it may be making a rebound, but I'm concerned that some of that pricing is due to this underlying inflation that I keep talking about, and that you've been saying also. And perhaps what we're seeing is less rental fundamental increase than we are just
Tony, before you take
money.
Before anybody spends that money, I just said it was telling you it's good times. I'm just saying it's getting better. But it's been so bad. In other words, the sales are so abysmal. I'm not talking about getting back to 2007. I'm talking about getting back to something reasonable. That's all we're talking about.
Keep people on your block from being able to sell their homes instead of being foreclosed.
But it's a beautiful time to buy a house. Low interest rates, great inventory. So get out there. If you got to have a job for 3 years or more, but that's the problem, of course. Okay. Thank you. Thanks, Tony. Thanks to you for joining us for this segment of Mid-American Money. And until next time, may your economic cup runneth over. Welcome to Mid-American Money. I'm Ernie Goss, Professor of Economics and Director of the Economic Forecasting Group here at Creighton University. And this is the Dean's Corner segment of our monthly video. And here is Tony Hendrickson, Dean of the college. You're going to tell us the good news and maybe some bad news, Tony. So let's hear it. What's going on?
Actually, we have great news this month. This is the time of year that we have rankings that typically come out. Yeah. And we're always kind of skeptical about rankings at Creighton, and we certainly don't chase those, but we're very appreciative of them when we get them. And I'm happy to report that for another year, we are the #1 Midwestern University ranked by U.S. News and World Report. We've been the #1 Midwestern University ranked by them for well over a decade now, so we're extremely proud of that.
Okay.
There's some specific rankings that we've been able to achieve in terms of business programs. First of all, our graduate program in information technology management for the first time has been ranked and was ranked number 16 in the nation this year. That's ahead of Harvard, UCLA, and University of Chicago. So those are very good schools to be associated with.
Does that mean I get a pay raise?
You're not an IT person.
That's
so
right.
Otherwise,
I'm in economics.
Otherwise, of course, we would, Ernie.
Okay.
But some other programs, our finance program, our graduate finance program.
That's getting closer to home.
It is getting closer. It's up from 21 to number 19 in graduate finance. And that's mostly our Master's in Security Analysis Portfolio Management program. And finally, our undergraduate program in finance was ranked 15th in the country this year.
Wow, yeah.
So to be a top 20 program in 3 disciplines, in 3 of those rankings is really phenomenal. And it shows the momentum of our college. And so the additional bit of good news is that our Board of Trustees voted to approve our project to move the College of Business from the Epley building on campus to the Harper Center on campus. And we'll be undertaking those activities over the next coming months.
That's going to be great. It's a wonderful facility.
And you'll get a new office.
I'll get a new office.
That's
Good.
right.
And is it a corner with a view over the city?
We'll get you a picture.
A picture of the city. Okay. Thanks, Tony. Thanks for joining us here for Mid-American Money, the Dean segment, and that's really great news. Great news for, I think, Omaha, the state of Nebraska, the Midwest, the U.S., and certainly for Creighton University.
Yes.
So thanks, Tony. Thanks to you. And again, may your economic cup runneth over between now and next segment, next survey, next month, and forever for that matter. Thank you. Welcome to Mid-American Money. This is the investment corner of Mid-American Money. Each month we have an individual from our portfolio practicum class at Creighton University, and we're joined by Chris Franz, and he's going to talk about what they're buying, what they're selling, how they see the market. Now this is, well, you tell us, Chris, about the portfolio practicum.
Sure. So like we kind of talked about in the past, This is a group of Creighton students, 16 strong. We manage a U.S. equity portfolio of over $4 million.
$4 million bucks. So what's the latest on the buying and selling agenda?
Sure. Well, right now what we've done is we've looked at last year's portfolio and we've looked at the price targets that last year's class set, comparing them to the current market prices, and we've identified actually 2 companies that we were talking about actually selling to book the revenue.
Okay, well, don't hold us in suspense. What are they?
Sure. Well, the first company is Vodafone,
Vodafone.
And the second company is Whirlpool. They have both reached what we call our intrinsic price values.
And that's generally a price-earnings ratio, maybe?
That combination of that dividend discount model, free cash flow to equity, we use a multitude of valuations.
Okay, and you're not really buying anything right now, are you?
No, not really. Like I said, we're really kind of focusing on what we have and what's done well.
And folks, from my angle, from an economist angle, not a financial expert, investment advisor, as I say, if Mr. Buffett will quit giving public policy advice, I'll quit giving investment advice. But he keeps doing it, and I'll keep doing it too. And what I'm recommending is I think stocks are pretty well priced, at least for the risk. And we're talking about, you and I talked earlier about the fiscal cliff.
Sure.
And that of course is the record tax increase and spending cuts for January 1st. I don't think it's priced into I think perfection is priced in right now.
Sure.
I think we could have a blow up.
I agree that the worst case scenario for the fiscal cliff hasn't been priced in the market, and if that happens, who knows what's going to happen to equities. And
I'm on in terms of my cash position, I'm not all cash, but I am much more cash than I was before. You think what do you think for the folks out there watching this?
Well, I don't think that's a bad idea, especially with all the uncertainty. You have the election coming up, you have, like we said, the fiscal cliff. A lot is happening.
Europe,
right now.
We talked in our previous segment, it's not been settled. Anybody who thinks Europe has been settled is, I think, dreaming, but well, that's not so bad, I guess, if you want to live in La La Land. But you watch, and again, back to my point in the last segment, watch out for Spanish bonds, the 10-year yield up to 7%. That's a real problem. Well, thanks, Chris. Sure. Thanks for joining us. Thanks for providing what's coming out of the portfolio practicum. And thanks to all of you for joining us for the Investment Corner. And we've been joined by Chris Franz with the portfolio practicum class at Creighton University. And I think we get some great advice out of them. And thanks for joining us. Until next time, may your economic cup runneth over.